Internal Revenue Service, IRS, tax news. IRS issues standard mileage rates for 2021. IR 2020-279, December 22nd, 2020, Washington. The Internal Revenue Service today issued the 2021 optional standard mileage rates used to calculate the deductible costs of operating an automobile for business, charitable, medical, or moving purposes. Beginning on January 1st, 2021, the standard mileage rate for the use of a car, also vans, pickups, or penal trucks, will be 56 cents per mile driven for business use, down 1.5 cents from the rate for 2020, 16 cents per mile driven for medical or moving purposes for qualified active duty members of the armed forces, down 1 cent from the rate for 2020, and 14 cents per mile driven in service of charitable organizations. The rate is set by statute and remains unchanged from 2020. The standard mileage rate for business use is based on an annual study of the fixed and variable costs of operating an automobile. The rate for medical and moving purposes is based on the variable costs. It is important to note that under the Tax Cuts and Jobs Act, there's a link to that here, taxpayers cannot claim a miscellaneous itemized deduction for unreimbursed employee travel expenses. Taxpayers also cannot claim a deduction for the moving expenses unless they are members of the armed forces on active duty moving under orders to a permanent change of station. For more details, see moving expenses for members of the armed forces. There's a link to that here. Taxpayers always have the option of calculating the actual costs. There's a link to that here, of using their vehicle rather than using the standard mileage rates. Taxpayers can use these standard mileage rates, but must opt to use it in the first year the car is available for business use. So you gotta, basically, if you're gonna use the standard mileage rate for the car, you typically need to do it in the first year. Why? Because the IRS is concerned that people will then depreciate the entire amount of the car, given you have accelerated depreciation types of methods, and then move on to the mileage rate, which is kind of taking advantage or possibly double deducting in some way. So then in later years, they can choose either the standard mileage rate or actual expenses. So if you start with the rate and then you want to change in later years, then that might be possible. So leased vehicles must use the standard mileage rate method for the entire lease period, including renewals if the standard mileage rate is chosen. Notice 2021-02, there's a link to that here, contains the optional 2021 standard mileage rates as well as the maximum automobile costs used to calculate the allowance under a fixed and variable rate FAVR plan. In addition, the notice provides the maximum fair market value of employer-provided automobiles first made available to employees for personal use in calendar year 2021, for which employers may use the fleet average valuation rule or the vehicle's cents per mile valuation rule.